Good morning, everyone. It is a wet morning, isn't it? Morning and morning. Yes, Annie, I agree with you. Happy rainy day. And it's a Wednesday some more. Let's have a good session today, okay, everyone? Oh, Lee Ching On, sunny day in Kuching. Ah, welcome, welcome. Thank you for joining all the way from Kuching. Anyone work from home because of the weather? Now, everyone, you don't need to do the recording. What we would do is we will do the recording, and then after we have actually done for the day, what we would do is we will upload the entire recording to our YouTube channel. Yeah, so you can go to Syarikat on YouTube channel and then revisit the content. Lo Mei Lan, I hope I could sleep from home. Yeah. Hi, Karen. Thanks for supporting. Yeah. So everyone, not to worry, we will be doing the recording. And then after that, yeah, we will upload the recorded Zoom to our YouTube channel, Syarikat on YouTube channel. And then you can re-listen over there as well. Pamela Ng say appreciate to lower down the music, cannot hear the coordinator. Oops. Okay.
Agnes, they prefer your voice over the sound of the music.
Okay, okay. So Hongwei, maybe you can like just tone down a little bit more. So we already have Chris with us. Chris, thank you very much for joining.
Thank you for having me.
Yeah. Have you have your coffee ready? Everyone, please have your coffee. It's a coffee on
Yes.
Zoom, so it's more like a light moment. We chit chat over it, but we deep dive through the topics. Yeah. So today we need to strip crystal. Not a BFM morning grill. It's a coffee grill, Chris.
Coffee crew. Yep, my pleasure. Lots of questions and similar sessions regarding stamp duty recently. And everyone is now realizing how important it is, especially since we have just got, 14 days to the new year, right?
Yeah, that's right, that's right. And we have Chia Hong join us from Kuantan as well. YS Kwan cannot hear anything. Maybe do you wanted to sign back in again? YS Kwan, can you hear? How is other people? Can you hear us? Please also, great, okay. Yeah. For those of you, if you have difficulty in hearing us out, maybe you wanted to, like log out and come back in again. Rebecca say yes, clear and loud. Thank you for that. This is going to be the last Coffee on Zoom for 2025. So our grand finale, we have Chris with us from Lee Hishammuddin. I have to read them in full, right? Lee, Hishammuddin, and Gledhill. It's quite
LHAG is fine.
okay. Okay. So very honored to have Chris with us. Right. Okay. And I actually see that we have quite a big participation, yeah, coming from how to call the player in our industry. Yeah, Chris, from legal, from accounting practice. Yeah, okay. Someone actually sent in this on firefly.ai. Okay, ladies and gentlemen, not to worry. What we're going to do is we are going to record this whole thing, and then we're going to upload to our YouTube channel, Syarikat on YouTube channel, and you can re-listen to the content that was actually shared, going to be shared by Chris. Yeah. So I will be declining everyone's recording from here. Yeah. It is not that I don't allow you to re-listen again. It's because we will be doing our recording and we will upload it to our YouTube channel. Yeah. You go to YouTube and then type Syarikat on, you'll be able to see us there, and then you can listen from there. In fact, our past Coffee on Zoom, we also uploaded as well, right? Happy to also go there and then to listen up other Coffee on Zoom session that was pre-recorded. Maybe you didn't have the opportunity to listen through. You can go through it one more time, okay? Right? Yeah, they're organizing. Rebecca Chen said, thank you very much for organizing this webinar. It's very timely. Oh, yes, it is. Thank you, Rebecca. Now, the time now is 10:31. We have at the moment a signing in on 362. Chris, is it okay that we just wait extra 5 minutes? Participant, let us just wait extra 5 minutes because in fact, today we have a registration of 798. Close to 800 people. Yeah, close to 800 people registered actually. So the 798 at the count at 9:44 just now, right? So I really hope that everybody will not miss Chris sharing. And I think Chris will be very excited as well over how to call the number of people. So Chris, we
Yes.
will gonna have a lot of questions coming through. So for some of
Yes.
you who that maybe due to whatever reason last minute couldn't signing in, or any of the colleague last minute couldn't signing in, not to worry, we will be uploading it to our YouTube channel. Check out on YouTube channel. Here you go. There is a QR code. You can actually scan it and then subscribe. Oh, Christopher Chan. I see Christopher Chan coming through. Long time haven't seen Christopher.
It's impressive how you know so many of the participants personally, Agnes. And perhaps you can also post some questions to the audience later on their views on stamp duty interpretation. Make it interactive.
Oh.
Keep them on their seats. Make sure they are paying attention.
Yes. We have actually received a lot of questions, and then we would like to actually keep it in the chat. In fact, for some of the participants here, you may notice that, how come Syarikat On do not convert? Because already close to 800. A lot of people, once you hit 800, they will go to a webinar version. Yeah, they go to webinar version of the Zoom function. We purposely do not wanted to go to a webinar version. The reason why we don't actually ended up in the webinar version, Chris, is also we want to make it laid back. It's a coffee session. It's a morning coffee session. Everyone is, head down and with a cup of coffee, and then we chat over it, right? Yeah, so yes, I think Chris just now actually say something very fruitful. Now let's for everybody here, if you wanted to say something, please post it here. What is your thought about the upcoming stamp duty self-assessment system, and are you ready for it? What's your thought about it? Don't worry, we have checked the participant list. Inland Revenue Custom Officer is not part of our participant today, right? Right, this is a coffee session, right? So you can give us your thought. Give us your thought, yeah, about what do you think. The time now is 10:34. we are only halfway through the participants list that who registered. Okay, and then I think some of them are still signing in. Yeah. Chris, is it okay? We still start at 10:35. You okay with that?
Yep,
Yeah.
good with me.
Okay, Hong Wei, maybe you can unshare the screen so that the participant can see our speaker, Chris, and myself. Right? Okay. I think they are still coming in. Still coming. Okay. While the number is building, maybe I'll pass it to Chris for you to actually do your sharing. Yeah, Chris, house rule of Syarikat Ong is this is a coffee sessions. Enjoy the stage. Everyone here is drinking coffee together with you. And then go technical but lay back. Over to
Sure.
you.
Technical but laid back. Sounds like a contradiction in terms, but I will try and do that. I've prepared some very brief slides, which I'm going to put up on screen now. I must say that this is one of the first time I'm doing a session like this. I have been together with the LHAG team doing a number of stamp duty awareness session as part of readiness exercise for various companies for the upcoming transition to self-assessment. So it's great to be part of this Zoom session with Syarikat Ong as well to have this discussion with a larger audience simultaneously and to see what sort of practical questions will pop up from our sharing session here today. Can everyone see my screen?
Everyone, if you have, yes, yeah, give a thumbs up. I was about to say.
Great.
See,
So
they
let's
are
see.
responsive.
Very interactive audience. Yeah. So
Yeah.
let's see whether we can decode stamp duty today. So
Okay.
why is today's session important? A lot of people are asking me, stamp duty has got nothing to do with me. Stamp duty is a group tax problem. Stamp duty is a legal problem. I'm in operations, I'm in the business unit. I don't need to care about stamp duty, right? So the first thing that we always wanted to highlight to our clients and to our friends is that stamp duty is no longer just going to be a tax or legal concern. In the past, it may be viewed as such, but in reality, it is now going to be a compliance issue that will affect every department so long as you create business documents. The range of instruments that could potentially be chargeable to stamp duty is very, very wide from, as we will see later, memorandums of understanding, from employment contracts, internship contracts, quotations, purchase orders. All of this could potentially be chargeable to stamp duty. And with the upcoming to self-assessment, the responsibility will now be on duty payer to self-assess and decide how much stamp duty to pay and when to pay it, right? Very quick fun fact that I always like to share is on the origin of stamp duty. So stamp duty was actually first introduced 700 years ago in England in 1694 as a way to raise money in their war against France. But 700 years later, on a rainy Wednesday afternoon or morning, we are now doing a coffee on Zoom session to decode what stamp duty is about. And I think this is a reminder to all of us that taxes may often always begin as very temporary measures during very specific crisis, but may evolve to become something a bit more permanent, right? So when I took a look on the legal database on reported cases on stamp duty in Malaysia alone, over the course of the past 70 years, since the Stamp Act was legislated in 1949, there haven't been that many stamp duty disputes. There have only been at most, I think, 40 reported cases, fewer than 40 reported cases, in fact. And the reason could be perhaps because disputes were smaller, instruments were less complex, transactions were less sophisticated, and therefore there weren't much need to bring a case to court. No one saw it as something which is so important. Focus was more on tax dispute, income tax disputes, transfer pricing, service tax, and so on. But that seems to have changed in the course of the past 2, 3 years. We have a number of decisions going all the way up to the federal court, cases like Harvey Logistics, cases like Anju Steel at the COA, where increasing number of disputes are being brought to the court on the interpretation of Stamp Act provisions, right? And for the very first time in this year, on the 1st of January 2025, the IRB has also issued their stamp duty audit framework. And there's only reason there's only one reason why anyone would issue a stamp duty audit framework, right? They're essentially telling you, I'm going to be conducting audits. So the question is, are we ready for it, right? Very quick introduction on what stamp duty is. It is basically a tax on legal documents. It is a tax on instruments, not on transaction. Is if there is a way where you can go about doing your transaction in a way which is commercially practicable without the need for instruments, then stamp duty wouldn't apply. And in addition, there is also a provision in the Stamp Act which says that unstamped instrument would be inadmissible as evidence in legal proceedings. So first thing I wanted to decode is two phrases which I'm sure all of us would hear very, very often. So for the very, very seasoned tax advisors on this session, bear with me. I'm sure this is all too common to you already. So what is fixed duty and what is ad valorem duty? Fixed duty is self-explanatory, right? It's imposed as a fixed sum, regardless of the consideration or amount specified in the instrument that you are executing. And in Malaysia, I think in every single case where fixed duty applies, it is just a nominal duty of 10 ringgit. Ad valorem duty means duty which is imposed as a percentage based on the consideration or amount specified or the market value of the subject matter of your instrument. So for instance, the memorandum of transfer for the property which you are selling or buying, memorandum of transfer for shares which you are transferring, service agreements perhaps for which there is a service fee payable, loan agreements perhaps for which there is a loan amount payable. So I'll give you a very quick insight. In every single case, guess which duty taxpayers would be trying to go for? Fixed duty, right? No one wants to pay ad valorem duty, even though it has a very fancy Latin term to it. Everyone just wants to pay 10 ringgit duty, if at all. Some people may want to take the view that, is my instrument even really an instrument? Do I even need to bring it for stamping, or are there some sort of other exemptions that applies? 10 ringgit sounds good, but is there a way for me to not even pay that 10 ringgit, right? When you have a tax, there will be people who will try and mitigate it. That's the reality of it. So there are two very, very common misconceptions regarding stamp duty that I would like to quickly dispel. The first misconception is that stamp duty only matters if you need to produce the document in court. We hear that quite often. I don't intend to sue. I don't intend to file a court action. Why do I need to stamp, right? If I want to bring it to court later, perhaps I can then stamp it, right? But the reality is that stamp duty is required based on the nature of the document and the transaction, not just because you want to use it in court. So as I've explained earlier, there is a provision which says that unstamped instruments will not be admissible in court. But that doesn't mean that there is an exemption in the Stamp Act which says that if you don't want to produce it in court, then it's going to be exempted, right? Section 4 imposes instruments which are listed in the first schedule with duty, and Section 36 imposes a requirements on instruments which are chargeable with duty to be brought to the collector for stamping. So that's the first misconception that I wanted to dispel. The second misconception is that intercompany agreements do not need stamping. So lots of people come and tell us, I stamp all my agreements with my external vendors, with my external lenders, with my external borrowers. But documents which are created purely for purposes within the group, I don't need to stamp, right? Why do I need to stamp? Again, it ties back to the first misconception. I don't intend to sue companies within the same group, right? The reality of it is, again, that there is no exemption in the Stamp Act for intercompany documents. They can still attract stamp duty if they fall within the list of chargeable instruments. So for example, intercompany loan agreements, intercompany services agreements, and asset transfers between related companies. So we have talked about the upcoming change to self-assessment effective 1st of January 2026 onwards. And those were changes which are going to be brought about by the Finance Act 2024. Very quick comparison on what's the system now versus what's the system going to be like on the 1st of January 2026 onwards. Before the introduction of self-assessment system, Stamp Act operates under an official assessment system. Duty payers, you take your instruments, you submit it to the collector for evaluation of the applicable stamp duty. They will do your job for you. They will adjudicate, they will assess, they will issue you a notice of assessment. The only thing that you got to do is to pay. Once you pay, they will stamp it. Your instrument is considered stamped, right? But with the transition to self-assessment system from 1st of January, the responsibility is going to shift from IRB to taxpayers, whereby you decide for yourself, is the document that I'm signing an instrument? Is that instrument subject to stamping? How much is that instrument chargeable with duty? Is it under item 22? Is it under item 4? How do I calculate stamp duty? Is there a remission order which applies? Is there an exemption which applies? Upon making that determination, you then file your own return, and that filing of return with the instrument shall be deemed to be an assessment made by the collector. Duty must be paid on the date of the assessment, subject to the collector's power to raise assessments or additional assessments within 5 years, except whether it's fraud, negligence, or willful default. In such cases, no time bar applies. And again, the submission of incorrect returns or failure to submit returns may attract penalties. If this all sounds very familiar, it's because they are essentially aligning the regime of the Stamp Act with the regime of the Income Tax Act and the RPGT Act, right? RPGT has already moved to self-assessment this year. Income Tax Act has moved to self-assessment since, I think, 1997. So it is only a matter of time before this happened, and this has finally happened now. So one very important thing about the upcoming change is the creation of Section 36CA, and I'm sure we'll have very interesting discussions with Agnes later on the extent of the IRB's powers under this provision. So this provision essentially says that where no assessment has been made or where no sufficient assessment has been made within 5 years, the collector can raise an assessment unless there is fraud, willful default, or negligence. I won't get ahead of myself. We will discuss this provision in more detail later. Quick comparison on the penalties which are imposed under the current official assessment system versus the self-assessment system, and some curiosity about how it functions. So if you fail to file a return or to submit an instrument for stamping, current penalty is either 50 ringgit or 10% of the deficient duty if you submit it within 3 months, or 100 ringgit or 20% if you submit it beyond the 3 months period, right? So this is technically not a penalty for failing to stamp. This is a penalty for late stamping. They actually have a separate penalty for non-stamping, but the general provision which they rely on to impose penalty is Section 47A. Under the self-assessment system, failure to file return or submit instrument for stamping will result in a penalty of 200 ringgit to 2,000 ringgit. IRB very, very rarely imposes fine upon conviction. They very rarely prosecute unless the case is very serious. For submission resulting in underpayment of stamp duty, current penalty, there is none because official assessment, IRB assess. It cannot be a case where you have submitted something which resulted in underpayment of duty. Under self-assessment system, penalty of 100% of duty undercharge can be imposed. So the curious thing which I noted about how penalty works under the self-assessment system is that, think about it. If you have an instrument, a service agreement, for instance, or a loan agreement, and you are unsure whether or not you have a case for item 4, for which duty payable would be 10 ringgit, or item 22(1)(a), for which duty payable would be 0.5%, right? 0.1% remission if it's a service agreement. If you proceed to submit it for stamping under item 4, it is a submission resulting in underpayment of duty. You can be penalized with up to 100% of the duty undercharge. But if you take the view that this is so unclear, even after consulting Syarikat, I'm unclear, even after asking the Hishammuddin, I'm unclear, I just don't want to make any mistake, can I not submit? The penalty for failing to submit a return or an instrument for stamping is up to 2,000 ringgit. So this is a very curious feature of the Stamp Act as it currently stands, and perhaps it's something that the IRB will look into correcting, because it cannot possibly be their intention to encourage inaction rather than, the fear of being imposed with penalty for doing something wrong. Taxpayers shouldn't be penalized for having attempted to comply. And we see similar arguments that are taken for income tax purposes to be potentially applicable also when we defend taxpayers against the imposition of penalties under the Stamp Act when self-assessment system kicks into force. So one very quick case study, and Agnes, I think I'm going to be right on time for the amount of time which was allotted. I'm speaking a bit quicker because I want to get through my slides. so that I can move to the more interesting panel discussions with you. So
Yes.
one case that we did earlier this year, a decision by the Sarawak High Court, where we were acting as solicitors in charge of preparation of submissions, was for Sarawak Shell Berhad, Sabah Shell Petroleum Company Limited, and this is a case on the proper determination of stamp duty on an asset purchase agreement. So in this case, the company had entered into a purchase contract for goods and services. The purchase contract did not actually specify a minimum purchase requirement. The contract states that this is essentially going to be a master agreement kind of document. Purchases later on were to be made through separate purchase orders, and the purchase orders are going to be considered as separate standalone contracts. So naturally, the taxpayers submitted the contract for stamping at zero value, contending that it should be assessed under item 4, fixed duty of 10 ringgit. IRB rejected it, collector rejected it, and assessed ad valorem duty under item 22.1a. See, I already told you, in every single case, it will be item 4 versus some other ad valorem provision. So,
Chris, can you take a look at your slide? I'm seeing like one liner. The slide is actually having a problem.
okay.
Yeah, it's just like about 5 seconds. Ah, there you go. Yeah. Everyone can see the slide, yeah? If yes, then give a thumbs up. Okay.
Perfect. So
All right.
collector dismissed the company's objection, and we filed an appeal under section 39 to the High Court. So the issue is it an item 22.1a instrument? Is it a security instrument? Or is it item 4, a general agreement for which there is no specific amount which can be ascertained? The court ruled in our favor, and these were some of the arguments that we will raise contrasted against the IRB's position. So our main argument was that if you recall the wording in item 22.1a, that instrument must be a security instrument. Security in the sense that it creates and imposes financial obligations on parties. If you have a service agreement which guarantees payment of fees over a defined period, for instance, that is a security. Because if your client fails to pay, that is the document that you're going to rely on to enforce repayment terms. If a bank lends you money and the borrower fails to pay on time, that document is going to be the security instrument which you are going to rely on to enforce repayment terms. So in our case, we say that this purchase contract does not by itself impose any financial obligations or guarantee any payments. There was no requirement for minimum purchase, and the quantity of goods to be purchased and services to be rendered was also uncertain. What the IRB tried to do in this case was to say that, look, the reason why you entered into this contract was clearly because you intend at some point in time in the future to eventually engage each other for the sale and purchase of goods and for the provision and obtaining of services, right? And your contract has already stated the unit price for specific goods and services. If you cannot estimate, never mind, I will estimate for you. I'll estimate for you how much goods I think you're going to buy, how much services I think you're going to obtain. And then I will impose stamp duty based on this estimated minimum value. What happens if you subsequently exceed this value? IRB says it's okay, then you up stamp after that, right? So the issue with this position is that, as we all know from decided cases, stamp duty implication must be determined on the date of execution of the instrument. It cannot be determined by reference to some ex post facto element, right? That is after the fact. And the fact remains that in this case, on the date of signing of that instrument, it was genuinely the case that parties did not know how much goods they were going to purchase, how much money they were going to spend on services. So in this situation, the court rejected the IRB's view that an estimated contract value can be applied, right? So one very important feature in this case that I wanted to highlight also is that in the submission of the purchase contract for adjudication, the company has originally selected security instrument in their stamp duty application. And the reason, if I recall correctly, was because they originally selected item 4, but IRB said sila kemukakan semula di bawah taksiran security, right? And this became one of the key contentions by the IRB to say that, look, you yourself selected security. Security can only mean item 22. It couldn't mean item 4. So fortunately, in this case, the court agreed that submission of the instrument under security by itself cannot be regarded as determinative. But again, we got to be very, very careful, especially under the self-assessment system in the sort of boxes and columns that we tick and select when we submit an instrument for self-assessment purpose. So one last point, I think this ties back to the questions that we're going to discuss later that people have been asking us. Section 36CA, which we have shown earlier, the power to issue assessment or additional assessment and the power to go beyond a 5-year time bar period if there's fraud, negligence, or willful default. Can this power be used by the IRB to issue assessments for past omission to stamp instruments? If you got an instrument which you have signed 15 years ago, 16 years ago, which was never stamped because, let's face it, enforcement of the Stamp Act provisions wasn't really properly done with the same rigor and strength until 1st of January this year. From 1st of January 2026 onwards, can the IRB rely on this provision to now impose assessments for all these past instruments? And our view is that arguably not. And the reason is because there is a very important principle in law, in tax law especially, that legal provisions should not be interpreted retrospectively to impair an existing right or obligation. Very simple analogy that I always like to use. Today, the speed limit on the highway is 110 kilometers per hour, right? And if we drive at 110 kilometers per hour, if on the 1st of January 2026, Parliament changed the law to say that speed limit is now 100 kilometers per hour, can they issue you a speeding ticket for what you have done before 1st of January 2026? They cannot, unless the law specifically says that they can. And from our reading of the Stamp Act and the Finance Act, there has been no indication so far in Section 36CA that this provision is meant to apply retrospectively. So Agnes, as promised, short and sweet within 30 minutes.
Well done, Chris. Well done, Chris. Okay, now, ladies and gentlemen, you will realize that there is a lot of content. We wanted to actually bring it to our conversations because we wanted to actually have a 1-hour session with Chris, whereby we will then address some of the questions that is already posted to us. I think to actually sum up a little bit on the slide, Chris, this matter regarding the retrospective power is actually one thing that is very uneasy to a lot of people, right? And the introduction of 36CA and stuff like that. And of course, the matter relating to item 4 as well as item 22. These are all the issues that we would like to actually talk about. But before we went into that, Chris, is it possible that you address a little bit about Anju Still? Because Anju Still also talks a bit about the agreement. I saw in the chat room, right, there are questions regarding what I'm supposed to stamp and etc. Ladies and gentlemen, be patient. We will go into that later. But to actually follow through with the, how to call the Sarawak Shell as well as Sabah case, to Anju Still, would you be able to give it like a story approach on Anju Still?
For me, the Anju decision is the perfect case to illustrate how challenging interpreting the Stamp Act and the exemption orders can be. Because this was actually a case where the High Court, the taxpayer, and the Court of Appeal, all looking at the same provisions and the same facility instruments, each form completely different view on what the proper legal position should be. So the court in this case was considering the proper stamp duty payable on certain facility instruments, where essentially the facility instruments was for up to a maximum credit limit of 105 million. There was no fixed period or tenure for repayment. There is also no fixed term for repayment, right? So the question in this case was, is this an item 22.1a instrument or item 22.1b instrument? Item 22.1a applies if there is a fixed period and if the total amount to be ultimately payable can be ascertainable. Item 22.1b applies if there is no fixed term or if it's for the term of life, right? And this question is very important. This question is very important because if you come under item 22.1b, you can benefit from a remission order. If you come under item 22(1)(a), you got to pay stamp duty on 0.5%, in this case, on 105 million, right? So the court said in this case that if you have a loan instrument, the first takeaway is that if you've got a loan instrument with a maximum credit facility to be distinguished from a term loan. Term loan means the amount is already fixed, disbursement is going to be fixed, repayment is going to be fixed. If you got a maximum credit facility amount, there is no fixed tenure, there is no limit on repayment period. This is not a fixed term loan. This is not fixed repayment. This is not a case where you come under item 22(1)(a). In this case, we must look at item 22(1)(b). That's just the first part of the analysis. Because if you come under item 22(1)(b), stamp duty payable is actually 1%, which is 100% higher than 0.5%. The second question that you got to ask is that, do I come under the conditions for the remission order under the stamp duty remission number 2 order of 2021? And essentially, the key conditions to benefit from remission under that remission order is, number one, we are already fulfilled. We got to be under item 22(1)(b). There has got to be no fixed period. Second condition is that it must be without security, and it must be either repayable in a single bullet lump sum repayment or on demand. If you fulfill all these conditions, then you can benefit from the stamp duty remission order. The second key takeaway that I wanted to highlight from this case is on how remission applies under this remission order. So before the Anju case, everyone thought that the remission order says 0.1% of the stamp duty payable is remitted. Amount in excess of 0.1% of the stamp duty payable is remitted. So everyone, including the High Court, thought that this means that if the remission order applies, if my facility amount is 105 million, stamp duty payable is 0.1% times 105 million. And everyone was already quite happy with that, because compare that with item 22(1)(a) of 0.5%, you're already saving 0.4%. The Court of Appeal actually came out and said, no, look at the wording. The wording is stamp duty which is in excess of 0.1% is remitted. If you come under item 22(1)(b), stamp duty payable is actually 1%. So therefore, it means that if you come under the terms of this remission order, the stamp duty that you have to pay is 0.1% times 1% times your loan amount of 105 million. A much more beneficial position compared to that which taxpayers have taken in the past. So one key thing I must highlight, Agnes, is that from my experience in dealing with clients, even now, even today, there are still many, many cases where the IRB is refusing to give effect to the undue position or pretending that they don't understand the impact, right? I'm doing a few cases whereby despite the agreement fulfilling all those conditions, security is stated as clean, the repayment is in a single bullet lump sum, and it's very clearly no indefinite period. IRB in some cases, they don't come outright and say, no, I'm refusing to give effect to the undue decision. They will say, tak jelas, sila jelaskan. Please explain in more terms. And client will come to me, they are very trusting. They will say, look, can we explain further to the IRB? And I will tell them, you cannot explain something to someone who don't want to understand, right? Why are they telling you that they cannot understand? They are telling you they cannot understand because they cannot tell you that they don't want to give effect to the provision. So you got to decide. If they really don't want to give effect to this provision, what do you want to do? Do you want to pay, or do you want to perhaps take sterner action?
Yeah. Yeah. So that will become a business decision. Then maybe you have to look for Chris separately if you have the contract like that. So would you say undue still case will actually be very much applicable and very relevant to interco financing kind of transaction?
Especially relevant, because intercompany agreements is one kind of agreement where you have quite a bit more flexibility and latitude in terms of how you want to draft those agreements, right? With your borrowings with external parties, with financial institutions, with banks, if they insist on having a security, what can you do, right? If they insist on having a fixed term, what can you do? Obviously, sometimes they'll be happy with having the right to demand repayment in a single lump sum or to ask you to repay on demand, but they may not be so flexible with the other conditions. But with intercompany agreements, you actually have quite a bit of latitude operating within the confines of the law and behaving as if you are arm's length party still, because we cannot lose sight of our Section 140 and 140A requirements just solely for the purpose of minimizing stamp duty, right?
Of
But
course.
within those confines, there is quite a bit of latitude in crafting the agreement in such a way that you can benefit from this 0.1% times 1% times your loan amount kind of situation.
Right. I deep dive further on that questions because I saw some of the chat room actually had this question. Assuming if the financial assistance, yeah, or this agreement actually came from intercompany outside of Malaysia, meaning maybe it's a holding company coming from outside Malaysia, with having a subsidiary in the country, and then they enter into this kind of credit facility, right? And then there is no security attached to it. It is unsecured, maybe no fixed sum of repayment, but you could actually like draw onto the mother company lah, up to X amount, everything arm's length, etc. So this contract or this agreement, interco agreement, on the basis that I agree that I'm going to stamp on it, okay, rely on untrue still case by virtue of another party is actually oversee any changes to how stamping work, or it will be
The
the same.
only slight change is to consider whether or not the instrument is executed in Malaysia or outside Malaysia. If it's
Mhm.
executed purely outside Malaysia and never brought into Malaysia, then stamping obligation hasn't yet arisen. You have got to stamp an instrument within 30 days if it's executed in Malaysia, and within 30 days after the instrument is brought into Malaysia if it's executed outside Malaysia. But other than that, like additional consideration, you would still also potentially be able to benefit from the remission order that Anju was considering.
I see. What if I deep dive further? Say, for example, the holding company in the overseas signed this agreement, then the Malaysian subsidiary signed it. Would it be construed as in Malaysia, executed in Malaysia? Or the document, like what we normally say, the agreement have to like received in Malaysia to do it. You know, nowadays digital signing lah, this and that. The physical document never arrive, you know. Yeah,
Yep.
would it really turn a little bit onto that kind of context? Practical
Yep.
question.
So the provisions of the Stamp Act has actually already addressed the possibility of electronic signing. So
Mhm.
instruments which are received in Malaysia electronically would also count as being received in Malaysia. In fact, there is a specific provision which says that where the instrument is received by way of electronic transmission, the date of
Mm.
receipt shall be verified by production of a copy or printout of the electronic transmission. So this would cover, for instance, emails lah. But if you are saying that your Malaysian company is quite happy to send an employee to fly all the way to, Amsterdam or New York or wherever is it, and sign it there, and then we keep the physical instruments there, and we also never email it back. We just don't bring it back physically or electronically. Okay, then maybe you might be able to say that it was never brought into Malaysia.
I see. Okay. Let me tweak it further, Chris, on this kind of things. Say, for example, okay, we now understand the backdrop of stamping in Malaysia right now, right? The holding company say, okay, lah, you are my 100% own subsidiary anyway, right? Okay. So maybe I just give you a notification letter to tell you that this will be the facility, you have to pay, blah, 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 but you don't sign.
Yep.
I just send it to you. I tell you that this is the term, but there is no co-signing on both sides. How?
So
So
I
how?
think this ties back to the question in the group now posed by Ra. Is it necessary to do an agreement between intercompany? If none, then we need them. And I think
Yeah.
tying back to your question is, can we do a notification of granting of a facility instead, right?
Yes.
So I will break this question down into two parts. The first part is, if we just have a letter, say if Syarikat, Ong, and LHAG were related parties lah. We are not,
Yeah.
but just for the sake of argument, Syarikat, Ong give me a notification to say I'm giving you a loan facility of 100 million. You don't need to reply. I will just give you the money, right?
Yeah.
And I just take the money, right? Is
Yeah.
this instrument a security instrument? I wouldn't think so. Because if anything happens, I don't pay, can Syarikat on rely on this notification letter to sue me for recovery of the 100 million? Syarikat on will say, I give you this letter already, means you accept the terms, right? I will say, by taking this money, it doesn't mean that I accept the terms. I thought it was just a friendly loan, so I'm happy to take it, but I didn't want to repay. Can that letter by itself be regarded as a security instrument? I wouldn't think so. So stamping obligation may not arise even under item 4 because there isn't even an agreement formalized in the first place. But when you're
Yeah.
dealing with external parties, right, or even within intercompany situations, is it wise to not have anything at all? I don't necessarily think so because we cannot just think about Stamp Act requirements. We must think about
Agree.
Income Tax Act as well. If the IRB conducts a transfer pricing audit on you, and they
Exactly.
want to ensure that the interest rate that you have charged is arm's length, or the other terms and conditions that you have entered into is at arm's length, the first thing which they will ask you for is the intercompany agreement. And if they ask you for it and you say you don't have it, and they ask you why don't you have it, your answer cannot be because I want to save on stamp duty, right? There must be other.
Even if I said that, they probably can't do anything to me, you know. Hey, today I'm layman, Chris. Today I'm layman.
Correct, correct. But they
Yeah.
will then say, okay, since you don't have a stamp duty, sorry, since you don't have an intercompany loan agreement, since you are not able to satisfy me what your terms are, I'm going to tell you what those terms are instead and deem interest income on the company lending instead. And maybe I will disallow the interest expense which the borrowing company has claimed for deduction also. So those are the risks that might arise if you don't have an intercompany agreement. There are ways perhaps to have the same sort of transaction without a dutiable instrument, but we cannot just not have anything at all.
I think one very important message that Chris and I trying to actually transpire here is stamp act aside whatever that we had to stamp or whatever, we feel that this is a transitional period. At the moment, everyone wanted to know how do we actually comply. So on the basis that things are actually complied, I think things will just get the ball rolling. Yeah, somebody will pay, somebody will know, an agreement will have to be done. It becomes part and parcel of life. Right. And then I think one very, very important thing that was also highlighted by Chris in his slide is actually on the retrospective power. I think the retrospective power is the one that is making everybody uneasy, right? And this retrospective power, how do we actually handle it? So, okay, ladies and gentlemen, allow me to be the person who shares slide now, because we have actually received a lot of questions, even prior to everyone posting it here. We have actually do our own recompilation so that for the benefit of everybody here, we can actually study everyone's cases and questions. So beforehand, ladies and gentlemen, I wanted to just keep our conversation within phase 1. We wanted to keep our conversation within phase 1. We're talking about January 2026 phase, whereby we talk about 3 types of instrument. We talk about rental and lease, we're talking about general stamping, and we're talking about securities. So that is why when we come to this, which part of the item we're talking about? Just now, Chris talked about item 4, item 22, and etc. Oh, somebody is actually having lines. Whoever who's using iPad, do you wanted to scrap off the lines? Okay, so just to let everyone know, when we highlighted item 4, we talk about general stamping agreement. When we talk about item 22, we're talking about instrument that is actually come with securities and stuff like that. You know, normally it's loan agreement related, I would say. Yeah, facility and loan, remember. Yeah. So, and item 49, we're referring to rental and lease. So since we are actually at our phase 1, yeah, for today's sessions, we will actually focus on phase 1. Okay. So now there will be first questions, Chris. The common FAQ, I'm sure the moment that you go around town to actually speak about stamp duty, everyone will ask you about how to differentiate item 4 and item 22, right? So allow me to use this whole long list. This thing actually came from everyone's chat room just now, right? Is my MOU stampable? What about NDA? What about this and that? Item H, we have quite a number of professionals, firms who's actually signing in today, whether it's audit engagement, cost side engagement, tax engagement letter, right? Let's talk about this. Now, speaking of someone, I think Karen just now asked about MOU. Now, to be honest, Shaika Ong also signed MOU. Yeah, we recently signed MOU with TAR UMT as well. And when we signed this MOU, the first thing that it actually came to our thought which Chris highlighted as well. Hey, don't forget MOU maybe is also stampable. And then he says, and then I think my colleague asked the question. So who is responsible for the stamping? The person, the first person who signed. But MOU is concurrently signed, right? So we have a lot of practical issues that we are talking about. So, Chris, don't treat me as a tax agent now. Treat me as a layman. I'm a SME business owner now. I would like to pose 3 sets of questions to you, right? When it comes to all these items that I'm showing here, which we, summarize out from everyone's questions, okay? Question number 1, how do I actually differentiate so-called item 4, general agreement, and items 22? That's question number 1. I know you have shared somewhere when you talk about the Shell Sarawak case, okay? Number 2, how do I avoid myself to be out of item 22? Because I wanted to stamp a fixed rate of 10 ringgit. I don't want it to be under the, how you call the Italian word, right? Yeah, ad valorem. I don't want to come under that. And question number 3, I'm a layman now. Question number 3, how do I even get myself out of item 4 altogether? Meaning, all this stamping, I just come and listen, check out on coffee on Zoom, listen to Chris, and then I confirm. Nothing to do with me. Yeah. So by looking at the list here, shall we use some of this agreement as a backdrop? We had a discussion here regarding generally what is the hard and fast rule to differentiate or set myself from item 4 and item 22. Okay. Number 2 is how do I avoid item 22 altogether? Number 3, maybe you tell me what is the definition of instrument, right? And at the same time, how am I being out of the definition of instrument altogether? Over to you, Chris.
Yep. So when answering this question, I will very, very carefully avoid the word avoid because that might create perceptions of avoidance and so on.
Sure.
Okay, but very simple question. How do I not pay any stamp duty at all? Well, the first thing you can do is to not sign any instrument, not sign any document. If you don't sign anything, then you have nothing that is stampable. But of course, as you know, in life, when we do business, we need to sign various kind of documents, right? We need to sign all these list of things here. How do we do it in a way which mitigates the stamp duty that you have to pay, right? So the first question, what documents could potentially be subject to stamping? Section 2 of the Stamp Act defines instrument as every written document. So first question, potentially all of this thing could be an instrument, right? But the question is then whether or not it's an instrument which is chargeable to duty. And when we compare item 22 and under item and item 4, item 4 is essentially basically a catch-all provision. If you don't come under any other provision in the first schedule to the Stamp Act, then item 4 may apply, right? So for item 22, the question is whether or not there is an agreement, as we have discussed earlier, with a fixed term or with an indefinite period, or if there is a term which provides for a total sum that is ultimately payable to be ascertained, right? If you have any sort of those elements in your document, then item 22 could apply. So I give you one example. If we look at item G, letter of award, right? If I am correct, if I'm issuing a letter of award as, say, a developer to my contractor to carry out construction services, and assuming that we don't subsequently enter into a construction services agreement, right? If the letter of award says this contract shall last for the term of 3 years, and within these 3 years, you must carry out this scope of work. And within these 3 years, for this scope of work, I will pay you, say, 15 million. And this 15 million is not subject to any variation, regardless of increase in prices of labor or materials or, other disruptions within the supply chain. 15 million is fixed. I'm going to pay it to you within 3 years. There is a fixed period. There is a total amount to be ultimately payable that can be ascertained, right? In which case, item 22(1)(a), 0.5%, but remission order caps it at 0.1%. It cannot be under item 4 because you already come under item 22(1)(a). So
see. So letter of offer come under 22(1)(a).
not all letters of offer.
Not
A
all, okay.
letter of offer in the manner that I've described earlier, with the conditions that I've described earlier, would come under item 22(1)(a), right? Another example, right? So if Syarikat Ong today decides to engage Hishammuddin to provide retainer services, and say you issue us a letter of offer also, and you say, I don't want this contract to have a fixed term of 3 years, because working just 3 years with Chris is too short a period. I want an indefinite period. I want the agreement to be for life unless I terminate it, right? Unless terminated, the contract would go on indefinitely. And for this indefinite period, the amount which I will pay you will be a fixed rate of whatever amount per hour, and it will depend on however much hours I use per month, right? In this case, there is no fixed term, so it's not item 22(1)(a). It could potentially be item 22(1)(b), but there is no fixed amount that is ultimately payable either, on which the 1% amount could be imposed. In which case, since 22(1)(a) doesn't apply, 22(1)(b) doesn't apply either, you fall back to item 4. So the starting position is you have always got to look at 22(1)(a) first and 22(1)(b). Do any of these provisions apply? If they don't, then item 4 apply. So distribution agreements, you got to look at whether or not there is a period, whether or not there is a guarantee of repayment. Notation agreement, generally now, after the Court of Appeals decision in the Nike case and the Kantari case, the IRB has generally accepted that it should just be at 10 ringgit. Intercompany agreement, we got to look at what agreement it is. Is it for services? Is it for loan? Is it for something else? Is there a fixed period? Is there payment terms? MOU is generally just a document intended to reflect a general understanding and usually does not impose any formal obligation per se. But the wording of item 4 as it currently stands is still wide enough to cover it, right? Because item 4 uses the wording agreement or memorandum of agreement, whether the same is only evidence of a contract or obligatory on the parties from it being a written instrument. So on the face of it, stamp duty of 10 ringgit may apply. There is an exemption under item 4 for matters whereby the value is less than 300 ringgit, where you can potentially rely on it. But on the face of it, it could potentially be subject to stamping. So similar considerations for all of these other instruments you have listed here from A to L.
So meaning to say, first thought process, ladies and gentlemen, is whatever that the agreements that you are having, that is actually a written agreement. So first of all, we talk about this is a written agreement. Anything that is verbal and whatever done over a coffee or beer or wine, right? We will just set it aside, yeah? Right, so we talk about written agreement. So once we talk about the written agreement, we firstly assess under section 22. Item 22. We firstly looked into whether do you fall under 22, item 22. After you assess whether you are not, then we looked into whether you come under item 4.
That's right. Yeah.
Am I right? So if you don't come under item 4, can I then conclude that I don't part of the stamp duty?
Yep, that's right. Sorry, Agnes, you're right to point that out. I have not come to the second part of your question, which is I satisfied myself that I'm not item 22 already. Can I explore whether or not this is not even item 4, right? If it's not an agreement, if I issue an email to you and say, can I have a quotation for tax services, and you reply me and tell me, look, these are the price for my services, and I don't subsequently engage, there is no agreement yet, so that's not item 4. Or if I issue something to you in the manner that you have described earlier, these are my standard rates, these are my fees, you don't need to reply. If you want to proceed with engaging us, just proceed with taking whatever necessary action that is required. Again, there is on paper no formal agreement that could be constituted as a security, in which case you may not even have to pay 10 ringgit under item 4.
I see. You see, let's go down to real life situation, Chris. Say, for example, for us, just now you mentioned about the tax engagement, which is a very, very relevant to us. Even a company secretary agreement, or should I say an engagement? It's more like an engagement letter, you know, we kiasu and kiasi, we better send you an engagement. The purpose, of course, to say that this is our scope of service, and then please don't sue the professional up to whatever the fee amount that we are paid. How much is the fee amount? We're not sure yet because it's still based on the menu that we'll be sending out, like a price list that we're going to send out based on as and when clients subscribe to it, right? Yeah, and then there will be like advisory that is on a case-to-case basis. Those will be a very general term in, say, for example, a professional engagement letter, right? And then once we actually have that, then we will have a column for our client to sign off and say they have agreed to our terms. So a lot of time, the purpose of those engagement is that please agree that this is my scope of service. This is my scope of service, right? Whereas the fee part, honestly, it is another appendices or another documentation to come. So when it comes to that, right, doesn't mean that we all have to actually have our engagement letters stamped now?
Generally speaking, yes, because the engagement letter that you have described to me sounds quite similar to the purchase contract in the Sarawak Shell case that I discussed earlier. You have fixed unit prices and so on, but there is no guarantee as to how much services would be obtained. But that agreement itself technically is an agreement, because if today I give you such an agreement saying that I will only charge you, say, 1,000 ringgit per hour or 500 ringgit per hour or whatever amount that I state in the agreement. If tomorrow you proceed to engage me and 5 months later you receive a bill for 1,000 hours that I spent doing work for Syarikat Ong and I've actually charged you at 3,000 ringgit per hour, what document are you going to rely on to say, look, Chris, you're overcharging me. It shouldn't be 3,000 ringgit an hour. It would be that general agreement that I have mentioned earlier, because your understanding is that both parties have formed an agreement. There is to use a Latin term, ad idem, there is a meeting of the minds that this is the terms on which we are going to proceed with our engagement. So technically speaking, do such agreements have to be stamped? Technically speaking, yes.
Okay, so if I am going to stamp it, if I go back to Sarawak Shell case, right? So the decision, the court actually ruled in the favor of Sarawak Shell case. So when we actually go into that, that means that that particular agreement we stamp at 10 ringgit.
That's right.
The decision actually changed, right? Am I right?
So what decision actually changed?
I mean, like if there is another court cases and then these decisions by the court was being overturned. The Sarawak Sabah Shell case was overturned. So we will be stamping at 10 ringgit, right? Under section 22(1)(a).
22(1)(a) is not 10 ringgit. 22(1)(a) would be 0.5% capped at 0.1%. Item 4 would be 10 ringgit. So Sarawak Shell, the High Court said we can stamp at 10 ringgit.
Okay, great. So, ladies and gentlemen, if you come under this case, I think we can at the moment rely on that. So, Chris, would you, is there anything else that you wanted to comment in here? Like just now we talked a little bit in depth about intercompany agreement, MOU, and then MDA. I think both of these two will be pretty similar, whereby there is no prices attached to it below 300 ringgit. So we can actually say is that it's just a general whereby we come under the exemptions, right? And then what about purchase order? What do you think? Because purchase order nowadays, if the purchase order is a big item, right? I am going to how do you call, ship a whole container or something for you, for example. So I have a commitment that I need to come into. So the purchase order may have to be carrying a lot of terms. Of course, the purchase order is just talking about certain quantity, but there will be purchase order that actually have a lot of other terms inside. How do you view the difference between these two? Are both stampable or is actually not stamped? It's actually no, because both will be signed by both parties.
Okay, between purchase order and? The difference between purchase order and?
The purchase order that has a lot of terms to say that, if this order come to the shore, blah, 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 if you do not fulfill certain thing, there is a T&C to it. Or purchase order that just say, this is the quantity, please sign, confirm, this is the quantity that you want. Is there any difference between these two purchase order when supplier and customer sign on both?
Essentially speaking, legally speaking, there is no difference in legal substance between a purchase order with lots of terms and a purchase order which just says, I want to buy at this price based on the quotation which you have issued. The former has more conditions and terms to it, but both of these documents also essentially creates a legal obligation. We got to be very careful, commercially
Mm-hmm.
speaking, when we want to argue that a purchase order is not a contract, especially if we are a vendor, right? If you
Mm.
are a vendor and just to get out of stamp duty, you want to say that purchase order which my customer issued to me is not a contract. What then happens if tomorrow you get a purchase order for 1 million in goods, right? And you
Yeah.
gotta send a container to Klang or Penang or wherever it is, and you don't stamp it because you say it's not a contract, it's not an agreement. There is no agreement. And then when the goods reach Klang or Penang or wherever, the customer say, I don't want to receive it. I changed my mind already, right? What are you gonna say? You're gonna say you issued me a purchase order, right? But you yourself have already said that no, it's not an agreement. There's no agreement yet. Therefore, I don't need to stamp it. So commercially speaking, we gotta be very careful
Mm.
in balancing our obligations. But the good thing is if you are a vendor and if
Mm.
you are selling goods in your ordinary course of business and those goods are your stock, there
Yeah.
is an exemption under item 4A. Under item
Mm.
4A, there is an exemption for agreement or memorandum for or relating to the sale of any goods, wares, or merchandise other than a hire purchase agreement, right? So if you're a vendor and you are selling goods as your stock in trade, you are exempted under item 4A anyway. So
Mm.
commercially, you recognize that this is a document which creates a binding obligation. The customer cannot just say when the container reaches his shores that, I've changed my mind. But from a stamp duty perspective, you are also exempted from payment of the 10 ringgit.
So this is a case whereby I access 22, I access 4, and then after that, actually, I'm totally out of it because I do actually have exam order that actually cover me at the same time.
You are in it, but you are exempted. And this brings us to a slightly thorny question at the moment, which is whether or not exempted instruments need to be submitted for stamping.
Yes.
Right?
Shall we comment on that? Shall Chris comment
Yes,
on
yes,
that?
I think that is a very important question for discussion, Agnes, because there are a number of different instruments which are exempted under the Stamp Act, right? Maybe
Mm,
if I can quickly show my screen and then we can go back to
sure,
your screen.
sure. Let me just unshare. Okay, over to you.
Sure.
Everyone, I know we have a lot of things to share, happy to re-listening it. We are going to upload it to our YouTube channel for you to re-listen to our conversations so that you can digest. Chris, over to you.
Yep. So as you can see under item 4, 10 ringgit duty applies if you have an agreement, which is not otherwise specially charged with duty. And then under item 4, you have exemptions. So the exemption which I mentioned just now, agreements relating to the sale of goods, exempted, right? Employment contract where the wages do not exceed 300 ringgit per month, this is exempted. And we know also that from the 1st of January 2026 onwards, they are going to increase this threshold to 3,000 ringgit because I certainly hope none of us attending this session today is still being paid 300 ringgit per month. And then
No.
item C, matter whereof the value is less than 300 ringgit, these are exempted. So the question is, if you are exempted, do you still need to bring it to the IRB for stamping? So
Mm,
very sadly, IRB's recently issued guidelines say even if an instrument is exempted from stamping, which means duty payable is zero, kosong, you still need to bring it to them for confirmation and to stamp and confirm that, yeah, you are exempted. And they say in their guidelines that if you don't bring this exempted instrument to them for stamping, penalty which they will impose is either 50 ringgit or 10% or 100 ringgit or 20%. So the question then you will ask is 10% on zero is zero, 20% on zero is zero. So how can there be penalty? They will say, since I cannot impose 10% or 20%, penalty will be 50 ringgit or 100 ringgit. The
mm,
difficulty, administratively speaking, is that if you are someone who is selling goods as your business, as your stock in trade, the number of agreements or purchase orders which you can enter into in a day if your business is good can be in the hundreds, can be in the thousands, right? Administratively speaking, it's complete burden to expect taxpayers to submit every single instrument just for them to confirm and chop that it's exempted,
Exempted.
even though you don't have to pay any stamp duty. So what I've highlighted to the IRB is that under item 1, affidavits are imposed with stamp duty of 10 ringgit. Under item 1, Roman numeral 1, affidavits signed for the purpose of being filed in court is exempted. So going by their logic, even affidavits signed by lawyers have to be submitted for stamping. So I asked the IRB lawyers, every single affidavit that I've seen you filed and which you serve on us in all our court matters, I tak pernah nampak satu stamp pun. Are you saying that you yourself as revenue officers have not complied with your own guidelines? So it's not a very feasible position at the moment, and hopefully it's something that's going to change once they realize the practical implication of it.
Yeah, so at the end of the day, Chris, so what we are trying to get to is, say, for example, you are out of the entire thing, you still have to prove that you are exempted in a way, right? Am I right to actually say that? And that itself is a work, it's an operational work that the taxpayer will need to actually comply with in a way. So in a way, you are never really out of the same act in many approach until and unless the inner revenue give a new directive to say that okay lah, how do you actually demonstrate you're exempted? You know, it's like, I am innocent, I have to prove my innocence. So I am exempted, I have to prove my exemption. So that procedure itself is an operational issue that has not actually been addressed. And then we are already very close to January 1st. So ladies and gentlemen, in fact, stamp duties, right? The moment that you go into it, it is actually like an e-invoice. It's operational issue. There are a lot of these other things that, we have to look into. So, okay, let us continue. I am also wary of time, but I really wanted to since Chris is actually dedicate his time here, wanted to tap his mind. So now, ladies and gentlemen, I saw questions on employment contract, whether stamp or not play on employment contract. Okay, now I wanted to use this media release by the Indian Revenue as our conversation with Chris on employment contract. Yeah, how does this employment contract will come about? Now, this particular thing was actually announced in June, yeah, mid of the year. Then we talk about pengajian yang dimuktamadkan, okay, the exempted. So there are three inside that particular media release, ladies and gentlemen. Please pick up a copy. Unfortunately, nowadays, everything in Bahasa. I don't have an English version for you, right? Allow me to, on the media release there are three items A, B, C that I wanted to use it to actually have a conversation with Chris. Number one, in the media release, it's actually mentioned that kontrak pengajian dimuktamadkan sebelum January the 1st. So if I may just make it into an English one-liner. So we are talking about contract that was dated before January 1st, 2025 to be exempted from stamp duty. At the same time, it's also remitted when it comes to the penalty. This is the first thing. But I'd like to actually let Chris to actually comment on a few things. Question number one, for all staff, never have contract before, remain as staff now, do we still need to create a backdated agreement or offer letter for stamping purposes to prove that, hey, this one exempt lah, or if yes, the agreement I'm creating now, this particular offer letter or whatever, suddenly I'm doing it now. So is it belonging to now or is it belonging to prior to Jan 2025? Right? This is actually the first question. Second question is actually for an employment contract dated before January 1st, 2025, do I still need to submit it operational matters for stamping, even though I already know and the media release already tell me that the stamping fee is exempted? Yeah? So question number one, we have participants, I saw that in the chat room as well, highlight about director, right? So yeah, I would like that to be under the context of director as well. So for question number one, meaning it can be an old staff, it can be a director, it can be a founder of the company, yeah, who never really attend to any agreement, but they are getting salaries, right? What's your thought on this?
Yep. So on the first question first,
yeah, contract never exists. Yeah, situation. Yeah.
Never have any contract. So
yeah,
the Stamp Act doesn't impose an obligation on you to have an instrument for every single transaction. They're not saying that you must have a contract for every single transaction, especially for employment situations. They are just saying that if you have an employment contract, then you have to go and stamp it. But it doesn't say that you must have a contract, right? You may wish to have it for other documentary purposes, especially if, I know that if I'm an employee, I will want to have the benefit of an employment contract, because what if things goes wrong? What if I get unfairly terminated? What if my employer don't want to pay my salary? If there's no contract, what am I going to rely on to assert my rights, right? But for many SMEs, if those considerations are not there, and if there was never any contract in the first place, then you don't necessarily need to create a contract for stamping purposes. But if you do proceed to create a contract now, even if you say that the contract comes into force earlier, that contract would have to be one which is finalized after 1st of January 2025. So you wouldn't come under this exemption on the right-hand side top column here, whereby stamp duty and penalty for late stamping is exempted and remitted. It would not fall under that category. And that
Right.
applies regardless of whether or not you are a director. So that's the first question.
Yeah. So basically, ladies and gentlemen, now don't go and how do you call HR who sign in, HR who sign in, don't go and do the 150 sets. That is in the past, because it will be treated as documents that is actually executed and done now. Right? Yeah. So, but then these are all staff, directors and whatever, that is already long before January 2025, already in the employment arrangement with the company. Right? Okay. Question number 2, do I still need to actually submit, assuming I do have the employment contract, before January 1st, 2025, do I need to do that exemption procedures by putting up and say, hey, hello, I come under your media release number A, category number A. Do I have to do that? This is actually January 1st, 2025. Or that was actually not being so-called like addressed by the customs as of now.
Yeah. So there's two questions which I always ask myself. What does the law say I have to do? And number
Yeah,
two is, what does the law say will happen if I don't do it?
yeah.
Right? Because that second part is also very important.
Mm.
So, as I mentioned earlier, IRB has already said even exempted instruments must be submitted for stamping, generally speaking. And if you don't submit it for stamping, they will impose late stamping penalty when you submit it for stamping. But in this case, they have said that not just that stamp duty is exempted, penalty for late stamping is also remitted. So, technically speaking, why do I need to bring it to them? Leh? Because if it's exempted, I don't need to pay duty on it already. And even if they want to impose late stamping penalty, they have already said it's remitted. So administratively speaking, why do I want to bring it for stamping and for that confirmation when duty is exempted, penalty is remitted? There seems to be no tangible effect to it. But if you are a super compliant, over compliant, I want to make sure that whatever the law says I comply, then I think the wording of the IRB's guidelines on media release is that pembayar cukai boleh mengemukakan untuk stamping. There's nothing to stop you from submitting.
Yeah, ladies and gentlemen, I think I wanted to use the term called out of scope lah. Maybe this is, during the GST time, we talk about this thing out of scope, this one out of scope. I wonder whether for question number 2, this one is out of scope, out of sight. Maybe we don't focus on that. But if you're looking into in the media release, there is this part B here. Part B here, if I summarize out in a simple term, we are talking about contract that was actually finalized from January 1st, 2025 until 31st December 2025, which is this year itself. This one, stamp duty is actually chargeable. Ladies and gentlemen, everything that we talked about now is actually employment contract, okay? And then the penalty for late stamping, if the stamp on or before the 31st December 2025, so you have another 14 days to go, 14 or 13 days ago, is actually remitted. So over here, I want to pose question to Chris. Can I not stamp on those instruments? Does the IRB has the power to compel them? Just now we talk about the retrospective power.
Yep.
Right? Because as far as the retrospective power under Section 36 CA, right, we are talking about starting from January 1st, 2026, right? So this is actually regarding 2025 what? So what happened? So can I not stamp on this instruments? And does the IRB have the power to compel the stamping of instrument executed before January 2026? Yeah, we're talking about it's already executed beforehand now. What's your thought on that?
Yep. So from what we see during the audits that have been conducted by the IRB, it is never the case that the IRB asks you for instruments and then immediately issue you assessments for those instruments which they say are unstamped. They will always start with, terima kasih kerana menggunakan sistem e-stamps, right? As we were discussing, Agnes. And you
Yes,
might be wondering, I pun tak guna system e-stamps, why do you want to say I guna system e-stamps? That's because after you agree, they will then say, okay, mohon tuan untuk kemukakan dokumen-dokumen yang perlu disetampkan ke dalam sistem e-stamps. And the reason why they say that is because there is still slight ambiguity now on what are their powers insofar as instruments which are not brought to them for adjudication are concerned. Section 36 of the Stamp Act, as it currently stands, says that instruments chargeable with duty shall be brought to the collector and then collector shall assess. So what happens if you don't bring it to them, right? They are also a bit unclear. That's why after the audit, they will ask you to submit it to them, to bring it to them, and then they can assess, right? But of course, there is still some uncertainty there. This provision is still untested. And the question that we must ask ourselves is, what are the pros and cons of insisting on a position that you don't have the power to that ask us to stamp? If we are talking just about employment contracts, and how many employers can you have? 5,000 employees, 3,000 employees? How much is 10,000, 5,000, and all that? You work out the amount of duty that you need to pay on the basis that penalty is also remitted already. And then you ask yourself, is it worth it as a matter of principle to dispute? In most cases, it may not necessarily be worth it. It may be more cost efficient to just pay the 10 ringgit duty. The other reason also is because even though they may not have power to issue you an assessment to ask you to pay the 10 ringgit, there is a power under Section 63 of the Stamp Act for them to impose penalty of up to 1,500 ringgit for instruments which are not duly stamped. They can impose a penalty for people who execute and sign documents which are not duly stamped. So again, if you're talking about a 10 ringgit instrument, is it worth it to run the risk of a 1,500 ringgit penalty, or is it better to just pay the 10 ringgit? Right?
Yeah.
That consideration may differ if we are not talking about 10 ringgit instrument, if we are talking about, say, a loan agreement which is worth a few 100,000 or even millions, right? But if we are talking just about employment contracts, cost benefit analysis, pros and cons, maybe just pay the 10 ringgit.
Yeah, so ladies and gentlemen, let's put our ego in the cupboards and then just move on to it. Yeah, okay. So what happened to instrument executed before January 1st that continue to remain in effect? I think any comment on this one? This one is also we picked up from some of our participants. I think this one, nothing much to comment because it will actually have other situational case behind it. So for participant today, after you listen through the recording many times or whatever, feel free to keep in touch with myself and Chris, right? And then we'll be more than happy to assist you when it comes to stamping issue. Maybe like this, like dispute matter, you go to Chris. Simple matter, you come to Syarikat. Oh, okay, right. Okay, so let's look into the third part of the media release, also relating, because this is regarding the employment contract, whereby we talked about contract that was finalized January 1st, 2026 onward, which is actually chargeable, and also penalty can actually be imposed. So how do exemption apply under the self-assessment system? Would there be any adjudication process? Meaning I am actually below 3,000 cases. What do I do? Do I still have to do it, submit it in to prove that I'm exemption, or what do I do?
So if you go by the more aggressive position, then the steps that you will be taking is to say that I'm already exempted, I am already out of scope, and therefore I do not need to submit for stamping. But if you go by IRB's guidelines, which, let's be frank, that's the more prudent approach to take at the moment, unless the circumstances justify a more aggressive approach, you would still need to submit it via the MyTouch system, and then select the relevant column to say that there is an exemption which applies, and then
Mm.
an assessment would then be issued to confirm that you are entitled to that exemption. So administratively, currently IRB's expectations is still that you must submit even under a self-assessment process.
So meaning to say the non-executive below the baseline of 3,000 on in wages term, you will still need to do the process lah. You need to actually upload and etc. Even though it come under exemption and stuff. Now, Chris, I didn't actually put it here black and white. I wanted to throw this question to you. You see whether you are comfortable answering it or not. Other
Sure.
issue of employment contract can be like, for example, when I find my employment contract with a non-executive, the salary is 2,500 only. So obviously, my HR will upload this to say this is under the exemption. Then after that, I realized that this person is a super performer. Okay, upon confirmation of his probation period after 3 months, I decided to give him 1,500 increment. So then the entire total wages is actually exceeded 3,000. So that letter that I'm going to send from a HR, from management perspective, right? I will just send and say, hey, congratulations, so and so, for your promotion and increment, etc. Right? And then please acknowledge receipt of the letter. Or maybe I don't even need the person acknowledge receipt. Just the management HR use the, like a digital signature or whatever. Sometimes not even digital signature. Just type it and then just send it over. Do I need to do stamping when there is actually an amendments and to the particular so-called like a contract sum?
So this is essentially a supplemental agreement. Okay, so say first you have an employment contract for 2,500 ringgit, that's exempted.
Yeah.
Subsequently, you want to increase the person's salary, say by
Mm.
2,500 ringgit also, so that total salary is 5,000 ringgit. If you just
Yeah.
issue a notification from HR and then you say, I don't need your signature, then technically it's not an agreement. There's some commercial risk to the employee, because if you then change your mind and say, no, 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 actually, you're not so great after all, I'm going to pay you the 2,500 in our contract. Can they do anything if there's no signed agreement? Technically, there is none. So in such a scenario, then you only need to stamp the first agreement, because that's the only contract.
Right.
If you then have a new agreement which says parties are agreeing that the monthly pay would now be 5,000 instead of 2,500, would be increased from 2,500 to 5,000, then that is essentially a new contract already that would have to be stamped at 10 ringgit.
Oh, so for HR, how to handle increment and promotion become very sensitive. So it can be this is a computer generation in notification to you, that congratulations, blah, blah, blah. Then I guess it is just a notification. Okay lah. Okay, Chris say better don't comment. Too many people sign in already.
Or
Okay.
work it into the cost of the promotion and say, I want to increase your pay to 5,000 ringgit, but first month I deduct 10 ringgit because I need to pay stamp duty.
Yeah. Okay, Chris, what about this? Okay, what is the definition of wages? Can my employment contract be this way? Like, okay, you are actually being paid 2,500. This is actually your contract, but you're entitled to fixed allowances and commissions payment, which came out to be 5,000 ringgit. So in total, this person is actually working home, 7,000 ringgit, But in as far as the employment contract is concerned, the highlighter is to say 2,005. So do I need
Yep.
to extend? What's your thought about this? What's the definition of wages?
So in tax cases, we usually apply the ordinary dictionary meaning of wages, right? And dictionary meaning says wages is a fixed or regular payment earned for work or services, typically paid on a daily or weekly basis. This is just, on a Google definition of what wage means lah. But similar definitions applies from the dictionaries as well. So key takeaway is it must be fixed, it must be regular, it could be daily, it could be weekly, it could be monthly. So if your contract says I'm going to pay you a monthly fixed salary of 2,500 ringgit, but on top of that, there could be commission, which could be dependent on sales, depending on whatever industry that you are in. Those commissions are not fixed or regular, right? So I would still view this as a contract which comes within the exemption under item 4A.
Ah,
Sorry, not
okay.
4A, under the exemption relating to employment contract.
Right, I see. Ladies and gentlemen, this is a very important information and tips. Huh? But having said that, today is a coffee session, it's a layback, your circumstances may be different from our conversation. We should actually talk about it offline on a case-to-case basis, yeah, for a proper advice. Now, ladies and gentlemen, I know the time is very short. Please continue to bear with us for another 15 minutes. Is it okay, Chris?
Yep.
Another 15 minutes for everybody here to get benefit. I wanted to show you one of my clients' letter. I got their permission to show. I got the permission to actually show on a recent stamp duty audit. Right. In this particular one, like what Chris has mentioned, the first sentence nowadays, wow, they are very courteous. They say, terima kasih kerana menggunakan sistem taksiran. Wow. First time being audited, and then they have to say thank you to me first. So this is a very different approach, as you can see, as compared to income tax audit. So over here, I wanted to highlight my client was actually being gone through the documentation. So they picked up 127 sets of documents. Ladies and gentlemen, when custom auditor come to audit you, it's not so straightforward because some of your agreement can be repeatedly presented, especially cases like, for example, real estate agencies. Yeah, I know there are quite a number of real estate agencies was actually here. Yeah, one of them is actually relating to this letter. I've already gotten the director's consent to actually show for the benefit of everyone, right? And then here, out of the 127 different type of things that the custom audit has actually picked up, it actually segregated under the phase one, the tenancy agreement and other agreement. So if we are coming on the context of, say, real estate agencies, we're talking about contract for service matter. Contract for service matter whereby it's actually signed between the agency and the agents. So now, this particular client, what they do is they actually went through the appeal and etc. Blah blah blah. They sent in the appeal, and then after the appeal is actually done, the inner revenue actually very courteous also to say that okay, I am willing to look into your penalty reductions lah. Okay, so they came up with the simple things like this to say that okay, dikeluluskan, right? So on a pengarah, as you can see, this is a real estate negotiator cases. All right, now. And then they have this particular sentence to actually they say that permohonan rayuan is actually in the stage of director's approval, right? The pengarah approval. But they say, in order for us to do anything, mohon pihak syarikat untuk mengemaskini senarai nombor adjudikasi yang terkini. So meaning after I've done all the audit, these are everything that you have not actually sent for stamping. Okay, now I found it through my audit procedure. Now I need you to, upload everything for me in order for me to charge you and for me to discount for you. So, Chris, I'm a layman today. I'm not a tax agent. I'm a layman today. What happened if I just left this letter as it is? I don't do this part. Can or not? Yeah, what action can the officer take?
Yep.
Right? This is question number one. Question number two is, hey, this is 2025, right? 36 is not there yet, whether they can actually go retrospectively to look into it before January 1st, 2026. What's your thought on this particular case? It's a real case.
Yep. So this goes back again to our question earlier. Can they compel you to stamp? What actions can they take if you don't stamp, right? And maybe I will share screen briefly to share that provision which I mentioned earlier on penalties.
Yeah.
So if you can see my screen, it says instruments chargeable with duty shall be brought to the collector and the collector shall assess the duty. That's why they are asking you now to update the nombor adjudikasi so that it can be brought to the collector and the collector shall then assess, right? That's why this whole back and forth, this very courteous process is necessary because perhaps they also know before 36 CA comes into force, They cannot straight away issue you an assessment. Maybe 1st of January onwards, the letters that you receive won't be so courteous already. Maybe they will just happily tell you, sukacita dimaklumkan bahawa berikut adalah taksiran, right? But
Yeah.
as it currently stands, if you don't submit under Section 36, what can they do? Right? They cannot issue you an assessment now, that's for sure. But as I mentioned earlier, there is a provision which allows them to impose penalty for executing and signing documents which are not duly stamped. So I have not seen any case so far where this provision has been imposed or has been invoked, because it's also not very clear how they are supposed to do it. Because if you know, Agnes, from Income Tax Act, the general penalties which people impose for non-filing of tax returns is under Section 112. And they impose that when they issue the Form J or the Form, not, it wouldn't be Form JA lah. If you haven't filed a return, it'll be Form J. Penalty under 112 will be included there. If you file incorrect returns, Section 113, the penalty will be included in the Form JA. But here, if they don't have power to raise an assessment, how are they going to impose the penalty? So that part is not so clear. But people have not yet been brave enough to go and try and find out, especially if the duty that we are talking about in this case is relatively small and they are also happy to waive penalty. So if instead you have cases where, say, you have lots of intercompany loans and each intercompany loans is, hundreds of millions, perhaps even billions. We have seen that in quite a lot of cases. And all those have not been stamped. Stamp duty payable, even if you were to apply the most favorable treatment in Anju, which is 0.1% of 1%, is still maybe a few 100,000, maybe even a million, right? Then we may want to talk about, okay, if you say I don't stamp, you're going to impose me with 1,500 ringgit, but each of my instrument, the stamp duty is already a few 100,000, maybe I'll take that risk. But if we are talking about a situation where the stamp duty payable on each instrument is not that much different, then taxpayers' perspective, and quite understandably so, would be, why do I want to get into this fight with the Inland Revenue Board when, commercially speaking, I can just pay and be a good compliant taxpayer, and maybe next year even qualify for a certificate of good compliant taxpayer.
Well, sounds good. Okay. So, ladies and gentlemen, allow me to continue. Okay. So, yeah. So, in this client's case, right, the advice shall be, go and kemas kini lah. Upload and then talk on the penalty matters and again, and then once it's actually being issued the reduced amount, if you're not happy with the reduced amount, talk again until you get to a midpoint and then get it over and done with. Yeah. So the question is, for those who has not been picked up, what do? You don't really have many days to go, right? So do you wanted to do a so-called like a stamp duty health check on all your documentations and stuff? I think a need is there for everybody to go down to all your documentations. So data privacies as well, something that my HR actually came and asked me, hey, everything is actually submitted in. So if most documents are required to be stamped and under the current e-system, all parties under the same portal, the security is an issue. Security is an issue. Those people who actually send for their tender document to be stamped, and those people who actually upload the employment contract to be stamped under the same platform, currently, I believe it's already been highlighted, but it has not actually been looked into the segregation. So how do you view, is there anything that you know about these segregations of assets, should I say the privacy assessment of documentation of the different officer who upload the e-stamping at the moment? Do you know of any?
Yep, sadly speaking, not much updates yet, because we have raised this issue with the stamp spotter, because company may not want the remuneration of high-level employees to be visible to everyone who is responsible for stamping. There may also be other commercially sensitive information. So there's no feature in the stamp spotter which allows for segregation in this manner. We were hoping that those features will be incorporated in the MyTax Spotter, but based on our latest check this morning by my colleague Jai, if you go to the MyTax Spotter and you click on e-duty stamp, it simply links you back to the old stamp spotter. So they say stamp spotter will cease to operate, it's going to be replaced with MyTax Spotter, but now they just link you back to the e-stamp spotter.
Right, I see. Okay, so we really hope that the segregation can happen. Otherwise, maybe a quick practical advice to everybody here is maybe you want to use a different director name. for different kind of stamping purposes. So that is actually being manually segregated into different portal by the director, because you need to use a director's name to do the employment, for example. You may want to identify one person. Okay, now stamp duty, this is an interesting question. I just bulat pick up from the participant and post it here. Stamp duty on the composite instrument involving goods and services. So what is the positions on composite? How to segregate? What is your thought on this? Quick one.
Yeah. So whenever possible, try and segregate the amount which is attributable to the goods and the amount which is attributable to the service. The reason being, as I've explained earlier, payment for goods is exempted. Payment for services may be subject to duty under item 22(1)(a). So if you can segregate it, that would be more beneficial. Otherwise, the risk is that the entire amount would be subject to ad valorem duty.
Yeah, so ladies and gentlemen, there will be things that operationally you may do some changes so that things are actually simpler for you as well. Liability and stuff, I think just now we cover a little bit. I'm just going to flesh out all the questions here. Yeah, for Chris to, like one round to take a look at it. Who is actually responsible for arranging for stamping and for the payment of duty? Question number one. Question number two, what is the impact on counterparty if responsibility party fail to pay? Meaning, it's supposed to be, Hishammuddin is supposed to do the payment with your contract with me, right? But you don't pay. Is there anything on me?
Yep. So perhaps I can share screen for this also.
Okay. Hold on a second. Let me just screen down. Okay.
Who is responsible for stamping generally is listed in the third schedule of the Stamp Act. So if you have an agreement which comes under item 32, this is for service agreement and for loan agreement, then it will be obligor or other person giving security. So if we put it into layman's terms, if there is a service agreement, who is giving the security for payment? It will be the service recipient, because the service recipient is going to pay the fees for the services, right? And in a loan agreement, it would be the borrower, because it would be the borrower that is giving the security for the repayment, right? So loan agreement, it will be borrower. Service agreement, it will be the service recipient. That's item 22. If you have contracts which don't come under item 22 and you fall back on item 4, then the law says person by whom the instrument is first executed, which means whoever signs that instrument first, then that person is liable. Of course, if you then ask me, memorandum of understanding, we both sign simultaneously, how? Then I think the law would regard both of you as being equally liable.
Oh my God.
Don't worry, it's just 10 ringgit at most, so it's 5 ringgit, 5 ringgit. I think Syarikat on can manage that. In terms of what would happen if you don't pay it, if you are the person who is liable to pay it, but you don't pay it, then there is a provision which allows for the IRB to recover that from you. There is also an ability for you to contractually agree otherwise. So Section 56 says that where any duty has been paid in respect of any instrument by any person, and by agreement or under this act or of any other written law in force, when such instrument was executed, some other person was liable to pay duty. The first mentioned person shall be entitled to recover from such other person the amount of duty. So it basically says that if between Syarikat Ong and Hishammuddin there is an instrument, and Hishammuddin is supposed to go and pay, but we don't pay, this allows IRB potentially to go and collect from Syarikat Ong. But Syarikat Ong can then recover it from Hishammuddin. Right? The other interesting thing about this provision is that it recognizes that by agreement, some other person can be liable to pay the duty. So if you have an agreement with your client, a service agreement, right? If you don't have any clause which says otherwise, default position is that service recipient shall pay. But they can potentially negotiate and ask for a clause to say that, no lah, I'm not so familiar with stamp duty. In fact, I'm engaging you for tax services. Can you go and pay the stamp duty instead? Contractually, the law allows you to have an agreement for someone other than what is provided in the third schedule to be responsible for payment of duty.
I see. Okay, that's extremely clear. Thank you for that. So I'd like to actually just highlight, let's look into question number 4 here. So item 2 of the third schedule, right, states that the person liable to pay stamp duty is a obligor, or the person providing the security, if the stamp duty is instead paid by the counterparty, will the party who is actually not statutory liable under the Stamp Act, but bear the stamp duty cost, can I claim under 33(1) under Income Tax Act?
Yeah,
Assuming that it's more than 10 ringgit lah.
yeah, quite an interesting question. And I think we perhaps also have to consider what is the underlying transaction for which the instrument is created, right? If it's a service contract, for example, and the service recipient is statutorily liable to pay it under the third schedule, right?
Yeah.
But I, being the party who is not statutorily liable, decide that, okay, I'm going to go and bear the duty, because otherwise my clients say they don't want to engage me. They will go and engage a different firm instead, perhaps a lawyer from another firm who is now in the audience also. Then I decide, okay, I'll go and pay this stamp duty. In a sense, am I not wholly and exclusively incurring it in the production of my income as a legal professional? I think there is a basis to take that position. But if we are not talking about an instrument like that, if it's an instrument, say, for the sale and purchase of shares, right, or for the sale and purchase of a house or of land, where these are generally regarded as potentially capital transactions resulting in capital gains or losses, then I don't think you would be able to say that you can deduct it for Section 33 income tax purposes. It doesn't seem to be a revenue expense. If we just apply the whether or not it's recurring in nature, this doesn't seem to be something which is along those lines.
So ladies and gentlemen, so if you decided to actually pay on behalf, right, you need to also take this into consideration. We may not actually have a straightforward answer for you, but it's something for you to actually think about, right? Okay, so very quickly, there are still a few questions that we have already summed up from the participants. Not many more already. Ladies and gentlemen, please bear with us. This extra information are really important. Generally, there are people who ask, hey, how do I calculate this stamp duty payable? Looking at the list and item number 1 here, loan agreement, service agreement, charge or mortgage agreement, right? Tenancy agreement or lease agreement. What's the rates that we are talking about for number 1? Say, for example, let's look into this one first.
Yep. So I think the benefit of charge mortgage and tenancy is that it's a bit less complicated, whereas for loan agreement or service agreement, it can be a bit more contentious, simply because, as I've explained earlier, for loan agreement, depending on whether or not it's for the term of life or other indefinite period, or for a fixed term or not, it could be 22(1)(a) or 22(1)(b), and depending on whether or not you have security or whether or not you have a clause saying that it's repayable on demand or in a single bullet lump sum repayment, you may or may not be entitled to an exemption order. So the possibilities are 0.5% if you have a fixed term and total amount is ascertainable, 1% if it's for the term of life or other indefinite period and you don't come under the remission order, or 0.1% of 1% if you fulfill the conditions of the remission order, or potentially if you don't come under 22 entirely, it could be item 4. Whereas for service agreements, you look at, is there a fixed term? Is there a total amount which is ultimately payable, in which case 22(1)(a), 0.5%, capped at 0.1%. There is a remission order for which there are no conditions. If it's for the term of life, then it's 1%. If there is no guarantee of minimum financial obligations, it will be under item 4. A lot of concepts, lots of possibilities, but I'm sure Syarikat Ong will guide you through the process. Yeah.
Thank you so much for that. Okay, I will.
Go ahead, Agnes.
Yeah. So for tenancy, just now you want to highlight about tenancy and lease, is it? Or
Yeah,
we go to question number 2. Yeah.
I think we can go to question number 2. Yeah.
Yeah. So question number 2 is, I believe this is a group of companies. Our organization provide continuous service with monthly fee that vary based on the volume of work and non-predetermined date. So I think this one we have already highlighted, right? On top on the service agreement base, right? Or is there anything else to add? This is more like a monthly retainer, I believe.
Yep, monthly retainer, but very based on volume of work, no predetermined end date. I would think that this should be correct. It should be item 4.
Okay, it will be item 4, which is 10 ringgit per se, right? Right? Okay. So how do exemption apply? Yeah, under the self-assessment. So this one, interesting questions, I believe it's probably come from a tax consulting firm. Yeah, to read with 35 capital A and section 37 capital 2A.
Yep.
2 capital A. Yeah.
Yep. So I think we covered this also just now. IRB
Yeah.
expectations would still be that you got to submit it and then obtain a confirmation that it's exempted. And there may be a processing fee to pay depending on how much duty is exempted. So if the duty which is exempted is less than 10 ringgit, is 10 ringgit or less than no processing fee. If the duty which is exempted is more than 10 ringgit, then there is a processing fee of 10 ringgit that has to be paid.
Yeah, so a lot of operational thing, ladies and gentlemen, when you're dealing with the exemption situation until we have new directive from the custom officer regarding what shall we do next. Yeah, okay, ladies and gentlemen, I think I'd like to end it here. Unfortunately, no more further Q&A because I think we have covered a lot. If any of the above conversations is very voluminous to you, not to worry. We will be uploading the entire recording to our YouTube channel. Feel free to actually listen it over and over again. And then I think of any slide, this is the very most important slide, right? Screenshot this particular one so that you can actually contact us as well as Chris' side, right? For any further, dispute type of questions pertaining to the upcoming stamp duty and the self-assessment under stamp duty. So I will be stop sharing here. So ladies and gentlemen, I hope that you find today's useful. And all the questions that in the chat room, my team here, please, copy the entire chat, okay? So what we normally do, like those of you who have been with us, copy on Zoom after another, is we will actually sort out all the questions and we will still go and answer the question and then we will email back to you. Okay, this is a challenge that we wanted to take on your questions. So not to worry, everything that you put on the chat room, it's going to come. Okay, all right, thank you everyone for your participation. Chris, wonderful sessions. I hope you enjoyed today's sharing.
I did. Thank you for having me, Agnes, and thank you all for your time this morning.
Yeah, and I think everyone here is actually happy. Everyone happy? If you are, please give us the thumbs up and then all the claps and everything. Yeah, for a great effort coming from Chris. Wow, lots of people, very interactive. See? I hope to welcome you again next time.
Sure, always a pleasure.
Everyone, Happy New Year. Hope you actually have a good time. If you need a health check onto all this documentation, segregating which section is actually come under, feel free to give us a call and then we'll see how we actually support and assist you from there. If you potentially see that you're actually going to have a dispute, yeah, we'll be happy to link you to Hishammuddin here to let you actually have a conversation forward with them, because I think they really have a lot of experience in helping clients. We wanted to be able to provide to everyone. YouTube link, yes, correct, Margaret. You go and go to YouTube, type Syarikat Ong, you'll see, and then subscribe and wait for it. Normally will take a little bit more time because we ourselves will go through the recording one more time. Normally we don't sanitize things up, but if there's anything sensitive we feel that we wanted to sanitize, we will do a little bit. And then after that, you pretty much will actually have the 95% or 99.5% of whatever is the recording, so that everybody learn. And then we will be very happy if you have other questions, continue to post it to Syarikat Ong as well. Yeah, we'll be happy to actually continue to answer everyone from there. Yeah. So thank you, everyone. You may exit the meeting.
Thank you. Thanks, Agnes.
Thank you, Chris. We catch up again. Huh?
Cheers. Bye-bye.
Agnes, can you pass the host over to us? We will like to copy down all the questions.